So can we finally say the crash is over? Dow was up 600 points today, which is 2.5%. S&P 500 almost 2.5% as well. The Toronto Stock Exchange was also up 1.5%. Nasdaq up 3%. So is it safe to say that there won't be a crash anymore? Just because the Feds confirmed today that they won't be increasing the interest rate? Personally, I don't think it's over. The market or the media always find something else to talk about, whether it's sales of real estate or construction of new homes, student loans. Something will come up that'll make the market go down again. So I don't think it's over, but it's definitely great to see that the market is able to rally up like that. Now, I don't think it's going to be a crash because when it crashes much harder than that. It crashes faster. Well, but what's going on these days seems to be more of a correction. And also the fact that Warren Buffett is currently buying stocks. So that gives confidence to investors on the market. So if we look at what went down today, Bombardier dropped 5%. So this is a stock I bought at $2. It went all the way up to 250, but I sold call options against it, so I can't really sell it until expiry December 21st, or if the options get exercised and someone buys the shares off me at the strike price of $2.50. So I'd be making a profit of 50 cents per share plus the $45 that I collected by selling the call options, which is about 4.5%. I really hope this stock stays above $2 come December 21st so that I can either sell the shares depending on the price or continue selling covered calls every month. So come December 21st, let's say I want to sell January 18 covered calls or January 18 call options. Selling call options is called writing covered calls when you already own the shares. So come December 21st, if I want to sell call options again, expiring January 18, so in about a month after December 21st, let's say I choose strike price 225. Right now they're trading between 25 cents and 28 cents. So let's say I'm able to sell it at 25 cents. I've got 500 shares. So I'd be getting $125 minus $15 of fees. I'd be getting $110 divided by my investment of $1,000, which is 11%. So that I'd be collecting 11% in 1 month. So I already collected 4.5% the first month. Potentially I can collect 11% the second month if these prices remain, and these prices will depend on what the stock price is come December 21st. Instead of selling the $2.25 strike price, I could sell it at $2. So my premiums will be higher, but I increase my chances of having someone buy my shares automatically at $2, which is the price I bought it at. So I wouldn't be making any profit from buying and selling the shares. My only profit would come from selling the covered calls. So the $45 that I collected the first month and potentially in this case would be 40 cents, potentially $200 that I would be collecting come December 21st. Which, if you think of it, if I had just bought the shares at $2 and sold it at $2.50, I would have made $250 profit on my $1,000 investment, which is 25%. But knowing myself, if I had bought the shares, bought it at $2, I would have sold at $2.25. So I would have made around 10%. So I would have made $100 or $125. So actually selling this strategy forces me to keep the stock longer, potentially extract as much as I can from the stock. AltaGas went down also today 5%. So I bought this stock yesterday at 14.5, dropped today to 14, and I think the low today was 13.83. So it looks like people are just afraid that it might cut its dividend. So investors are shying away from the stock. But if anything, they're not going to cut their dividends completely. If they were going to do something with their dividends, they would reduce it, not cut it completely. I mean, if you look at 5 years, they've been paying dividends since 2004, even more. But this chart seems to stop at 2004. So they've been paying dividends since 2004 every month. Started with 15 cents. And right now they're paying 18 cents. So they're very consistent with their dividends. So I highly doubt that they're going to do anything to their dividends. Yet the market is overreacting, which creates a buying opportunity for others. So oil dropped as well, almost 3%. Cenovus Energy dropped 2.5%. So this is a stock I have in my Investors Edge account. I'm trying to buy some more just to fill it up to 100 shares so I can sell covered calls on them. General Mills I put an order today on General Mills at $41, invested $1,000. not comfortable buying 100 shares of General Mills yet because $4,000 would represent a big part of my available cash. So willing to put $1,000 in this stock at $41. It didn't go through because it didn't reach. The lowest today was 41.37, so it didn't reach. We'll see what happens tomorrow, but this is a stock I like, of course. Pays good dividends, 52-week low. You could see in September, so like 3 months ago, it was trading at 47. A year ago, it was trading at 59. Revenues have been decreasing since 2015, but their profit has been increasing, so they're managing their expenses better. So what really matters is the profit at the end of the day. So their profit is increasing since 2014 or 2015, but the revenues have been decreasing. So their debt is probably high because it's very close to their assets, almost 1 to 1. And you can see from 2017 to 2018, their assets increased 9 billion, but their debt increased close to 7 billion. So their debt is increasing at a strong rate. So that's probably what's causing this stock to drop. So yeah, I'm comfortable putting $1,000 in it if it reaches $41. Orange hit 17 today. Aren't I happy? Bought it at 15.75. I think I'm at 10% on this stock actually. 17 divided by 15.75. Oh, 8%. Yeah, so I'll hold on to it a bit longer. Probably at around 18 or 19 I'll sell. Also pays decent dividends. So GM continued to drop today, reaching 35.94, but it finished the day strong, closing at 36.95, and even after hours is trading at 37. So it's like the market doesn't care what's going on with GM. It's so weird, it's so inconsistent, which proves that there's something going on in the background. There's some information that the regular investor does not have that's making the stock go up because all the story, the narrative is all bad. So the stock should be dropping, not going up. So what went up today? Amazon went up 6%. So I think I'm close to 10% on that actually. Bought it at 15.15 average price, closing at 16.77 today. So yeah, up 10%, but I don't think I'm going to sell this stock with a 10% gain. It's easily a $2,000 stock, especially after the holidays. I mean, everyone's buying from Amazon. It's ridiculous. I mean, personally, I don't like Amazon. I don't buy often from Amazon. I only buy from Amazon when I can't find something anywhere else. But in terms of pricing, it's never the best price. I'm thinking it's because of convenience that people like it, or they just like to follow the trend, go with what's popular. Regardless, I don't have to like it, but I understand it, and I'm very confident that it's going to reach $2,000 after the holidays. So I'm not going to sell it at this price. I'll hold on to it, but definitely happy I'm up 10%. Haven't seen some green in my portfolio in a while. MasterCard reaching $202. Bought it at 182. So I'm up 10%, close to 11% on that. So another stock that I'm up 10% on. But I'm not selling it at that price. I've got an order to sell it at $220 because this is a stock that just moves up like an arrow. So it would be stupid of me to just sell it early and not wait a little bit and make a much better return. Groupon went up 4%, so I could definitely continue selling covered calls on this. So I sold it the first time at a strike price of $3.50 with the January 18 expiry date. So come January 18, I could, depending on the price of the stock, if it's between $3 and $3.50, it's definitely going to be good for me to sell the covered calls. So come January 18, I could probably sell the February 15. That would be the next available expiry date. So February 15. And let's say I bought the stock at 280. So let's say I sell at $3 strike price. So the risk of selling at $3 strike price at a strike price that's close to my purchase price is if it gets executed, if the option gets assigned or exercised, then I'm forced to sell my shares at $3, the shares that I bought at $2.80. So I'm not making much of a profit on the shares, but if they don't get assigned or exercised automatically, I'm collecting potentially every month a decent gain, a decent return. So let's say come January 18, I decide to sell the February 15 covered calls. So obviously these prices aren't going to be the same come January 18 because it'll depend on the price of the stock come January 18. But let's say it's worth 40 cents for example purposes. So 40 times, I think I have 300 shares of Groupon. So 40 cents times 300. So I'd be getting $120 minus the $13 fees. So I'd be getting $107. And I think I have $980 invested in it, so divided by $980. So that would be an 11% return in 1 month. Let's say I do that every month, but highly doubt it. That's 131% return for the year. But on average, the strategy of selling covered calls usually gets you between 3 and 5% per month. So worst case scenario, 3% per month is 36% per year. If I can make 36% per year, I'm going to be very happy. And it's a pretty conservative strategy. It's not risky, it's not dangerous, because basically the only risk of selling covered calls is that you limit your upside potential. So if the stock goes to $6, for example, I miss out on that. I won't be able to sell it at $6. I'll have to sell at the strike price that I sold the covered calls on. So it limits your upside. But how many times is that going to happen? I'd rather get guaranteed profits than hope for a home run. Nvidia's up also today 4%. Dollarama's up 4%. GE's up 4%. Apple finally is up close to 4%. Bank of Nova Scotia finally reaching $72. Now this is a stock I definitely want to buy 100 shares of and then sell covered calls again every month. I'd like to respond to a comment which is regarding Great West. So any insurance company or financial institution is generally very safe, especially if it's trading at a 52-week low and it pays very consistent dividends, 5%. In the case of Great West, is a good stock. Might not be your best choice, but it's definitely a safe stock. I don't see it skyrocketing though, but it's got potential to go back up. 52-week range is 29.47 to 35.59, so it doesn't move much. It's very horizontal, but it pays decent dividends. Personally, I wouldn't buy it because I don't see the amazing capital gain potential, but if you're happy with 5% dividends, then it's great, and it's a very safe stock. Here, let's just look at the dividends. So it's been paying dividends consistently since 2002, and that's just because the chart stops here, but I'm sure it goes further than that. Personally, in terms of insurance companies, I'd prefer Sun Life. I'd rather buy Sun Life, but of course it's actually trading near a 52-week low. 52-week range is 47. The lowest was 47. So today went up 49. So actually yesterday was a good chance to buy this stock. I remember I bought this stock I think at 44 or 43 and sold it at like 48. So it would be hard for me to buy it again at 48 or 49. I would have to wait for it to drop to 43 or something to buy it back. It's got a 1-year target price of 56 and it pays decent dividends of 4%. So personally, I'd rather buy Sun Life. I think there's more potential there. And as a user, as a consumer, I prefer Sun Life over Great West. I've always had great service with Sun Life versus Great West. Manulife would also be a better choice over Great West just because it dropped harder, went from 27 to 19. It's got a 1-year target price of 29. Trading right now at 22, but it was trading at 19 during the correction. Pays 4.59% dividends right now, and also they have better service than Great West. So regardless of which insurance company you go with, they're all very safe. They all pay dividends. They're all very similar to each other. Just as a personal opinion, I prefer Sun Life and Manulife over Great West as a consumer. Won't even look at their financials. I'm sure they all have great financials. All right, so this was just a quick overview of the stock market today and some purchases I made. If you have any questions, leave them in the comments below. Like always, if you're going to trade on stock market, use my referral code in the description below the video to trade with Questrade to get between $25 and $250, depending on your deposit. Thanks for watching.